So that acts as sort of a future drag on where the economy can go, because if you're not employing more people, you're sort of sowing the seeds of your own destruction, because eventually that comes back to be too much. It's sort of like, sort of like an economic scale. If you have too few people over here that are getting hired, there's not enough jobs in the economy. It just weighs down on everything, and eventually, even the output part of it ends up tipping over too. And I think that's what a lot of the markets are worried about. Because the other side of this, I know you want to talk about this, Anthony, is sort of the leverage that's in the economy in a lot of different places too. I mean, one of the more popular topics, for good reason, especially the last couple of weeks, is a shadow banking and private credit. A lot of shadow banking and private credit, those two things are kind of the same thing, was predicated on the idea that the U.S. economy in particular, but the global economy too, were in relatively decent shape, so that a lot of these shadow banks, which are really just nothing more than investment funds, could take a whole bunch of risk because it seemed like there was no downside, or at least some limited downside that wasn't worth really paying attention to. But then you put the labor market that's shedding jobs into that equation, and suddenly now the credit markets have to take into account, first of all, maybe all the assumptions that were, that went into filling out the credits, the credit system, and some of these private credit conduits a couple of years ago. Now you've got, what's the real loss profile look like from that from that process, as well as, what are we going to go from here? What is the overall economy going to do as far as really forcing a reassessment and revaluation of some of these credit vehicles that have radically expanded over the last couple of years. And so it's not just a macroeconomic question, though. That's a big thing. I mean, we're talking about, losing jobs. It's not just a macroeconomic question. There are other components too. There's always a financial component too, but that's sort of the key ingredient and the key unknown is, how do those two play out from here, and how do they play out on this elongated timescale that we continue to see?